Welcome to our YouTube channel, Moneyline with Nancy TV. This is where you get the latest updates on business, finance, economy, market, as well as investment information. If you couldn't follow us live on television, please do subscribe to our YouTube channel. Also, press the notification bell so that you can get notifications. Thank you. Enjoy this video. Adeola Adenikinju is joining me right now. He's the president, Nigeria Economic Society. Prof, good to see you. Happy New Year. Welcome to the program.
Yeah, thank you very much, Nancy. It's good to see you again.
Now, let's get started. And I think I will start from where I ended, the tax reforms bill. What do you think as it concerns fiscal policy this year?
Yeah, I mean, I did a good thing that there has been a consensus around the tax reform bill. You know, some of the governors were very agitated and were against the initial bill that was proposed by the executive. But now there seems to be some agreement. I mean, it may not be the best that we hope for. I mean, in economics, we have what we call the best option, and then you have second best option. But at least it's good that we're having some consensus around the tax reform bill, and it will go ahead, and then we start the process of changing the current tax structure of that we have in Nigeria, and I think that will be good for the fiscal sector, for the states, for the fiscal side generally, because if you look at our tax revenue ratio, tax GDP ratio, it's very low. It's one of the lowest, in Africa, in Africa, anywhere in the world, and for a country where we have so much expectations that the government is supposed to deliver on dividends of democracy. The gap where we need to be and where we are is just too far. So we need to find a way of narrowing that down so that we enable the state to be able to perform some of the responsibilities issued to the citizens.
You were at the National Assembly yesterday.
Right.
2025 budget presentation, of course, before the Senate Committee on Appropriations.
Right.
Speak to me about some of your thoughts yesterday.
Yeah, you know what what came up from analysis of the appropriation bill with the National Assembly. There are a couple of things. One is that when you look at the budget, the expenditure, the size of the budget, 49.7 trillion naira. Nominally, that looks very big. Okay, I mean, to dwarf other previous budgets that we had, it was almost 4 times the 2020 budget. But when you begin to do a deeper dive into the budget, and you look at rate terms, you see that the gap is very, very narrow. So once you take away the influence of inflation, that the gap becomes very narrow. And then when you then look at the dollar rate, the dollar value of the budget, you'll be amazed. In fact, like the Senate President said yesterday, that it was like a casting a doom, because we're looking at a budget of 33 billion dollars rather, for a population of 220 million people. Kenya, that was 1/5 of Nigeria, was doing 30 billion. South Africa was doing $418 billion, not to talk of, comparator states, looking at Brazil and the rest of them. So we are very far from where we need to be. So, and like I also argued, I said, look, the problem we have, in my view, really, it's the revenue challenge. It's the revenue challenge. We must be able to.
Is it revenue or spending?
It is revenue.
Why is it revenue? Even the little one we are getting, we are not spending it well.
But you see, it's like you have. I agree with you to some extent, but it's like somebody who should be spending 10,000 naira, and you give you 100 naira, you are worried that it's not spending 100 naira well.
There's somebody that should be getting 10,000 naira revenue is spending 100 naira. You are worried that he's not spending 100 naira.
You are worried about how he's spending the 100 naira. The first problem is this guy should not be where he is. where we are, you see, because when you look at per capita, that is equivalent, that the whole budget, assuming that they did not even steal anything, they did not waste anything, will simply be $144 per citizen. In that 144 per capita. That's where you want to do health, you want to do education, you want to do, there's so much demand. That is totally So that was one of the points that I made yesterday. And then I also did an analysis that showed that only just about 11 MDAs accounted for almost 90% of the entire budget. Again, almost the same number accounted for about 12 MDAs accounted for 90% of capital allocation. So really, there's a whole lot of inequality with the distribution of that budget, okay? And I was suggesting to the National Assembly that it's very important that they look at these 10 sectors, or these 10 MDAs, and do a deeper dive analysis on them to ensure that, look, in terms of spending, they are very efficient. Then the capital that's allocated to them, they use that to grow jobs. Because we must start to link our capital expenditure, the projects, to some definite macroeconomic outcomes, okay? So if you get 1 billion naira or 10 billion naira capital allocation, how many jobs do that amount, direct or indirect, at the end of the year, and so on and so forth. So there's a need to also take a deeper dive into that. I think if the budget is well implemented, because you have a lot of money going into infrastructure, okay, and if it's well implemented, the capital allocation is, is released on time, the projects are well done, then we'll begin to see some impact on, the power sector, which is very important. Start to see some impact on telecommunications and even and roads infrastructure in Nigeria. So those are some of the highlights of the presentation.
Do you see any fiscal risk this year?
Sure. I mean, the risks are always there, and one will come from the assumptions underlying the budget, okay? Again, looking at which one of the things I also showed yesterday, what are the stylized facts about Nigeria budget? And one of the key stylized facts you always find is that our budget revenue is built on oil. It's always been oil, okay? And two, a chunk of our budget comes from, from debt. We spend, So basically, fiscal risk will come from what happens to those assumptions around oil, what happens to the price of oil. And I told them that, you see, because you don't know the future, you have to be very conservative about the assumptions you make, okay? So that you have some headrooms in case of headwinds, in case of any unexpected volatilities in the markets, external or internal. So you need to build buffers, okay? And those buffers will have come if you are very conservative instead of spending the entire money that you have, okay? So basically, the risk will come basically from those assumptions. What happens to oil production? So a lot of people feel that the 2.06 million barrels per day is still difficult. It's going to be unrealizable. Well, I think we may be very close to that.
Yes, giving
a lot of the risks now. Almost 36 risks are, from 8. There's so much activities that are going in that sector. So I'm bullish that yes, we'll be very close to that. Even the price of $75 per barrel, again, is feasible. In fact, one of the things we did, before I went, was I polled about 350 economists to look at their views on some of these some of these assumptions, and the outlook, their views is very close to what we have in the budget, except inflation, okay, where there's significant divergence. Whereas the government is talking about 15%, the economists, 350 economists think that it will be around 28%. I think it can be lower than that, really.
So now that we've talked about inflation, let's talk about monetary policy. What's your outlook for monetary policy this year? You were a former member of Monetary Policy Committee. I wonder what kind of thinking goes on in that committee when you and your former members meet. It's a very difficult one. Inflation in Nigeria continues to be stubborn, 34.8% now, even though that the NBS has said it would revise. Of course, there will be a new rebased one on a new methodology. A lot of people have said it may actually reduce that number. And perhaps that's why the president is thinking 15%.
Right.
But 15% nominally, but not realistically. I hope you understand. Right. So what do you think?
Yeah, I think actually it would be interesting to know why, I mean, you are in the press, you will know why the MPC was moved from January to February. Maybe they are waiting for these figures, really, these revised figures. Because I mean, if they had met this month, given the inflation rate figure that was released, that inflation, rose, and given the objective of, I mean, the inflation targeting objective, they will have no option than to respond. Okay, so now by postponing to February, okay, likely when January figure will come out, there's going to be a dip in inflation. Dip in the sense that traditionally by January you expect inflation to come down, and two, the revision that is being done was likely also to bring down the inflation figures, because now that you have reduced the weight of food in that basket, the thinking is that inflation may actually will come down. The next figure is likely to come down, and that would then give the Monetary Policy Authority the justification to start now, recalibrating.
So what kind of recalibration do we expect? Because anyway, those of you that are economists, and I assume, of course, there are a lot of monetary economists and all of that at the CBN. So I wonder what that recalibration will mean, because the base year, of course, will change to 2024. We may not likely see 34.8%. President expects 15%. So if it goes lower, does that mean that we also expect to see lower NPR?
Yeah. Once they see, you see, because again, once you say you are doing inflation targeting, what you simply say that I'm going to respond to inflation. If inflation goes up, I'm going to adjust my inflationary parameter, my monetary policy parameters to upward, to tighten it. Okay, if it comes down, I either stay that or I relax it. So I mean, so again, most likely now, and I think that's perhaps the wisdom, behind the postponing the meeting, which is to now say, look, we can start unwinding, because one, if the values comes down, okay, that will be a signal that look, one, either to hold, because again they have not told us what is the range they are looking at. Because usually the CBN will have some idea as to what is the range of inflation that is conducive to growth. Previously, the rate was between 6 and 8%. 6 and 9%. Yes. So once you have so that's where you want to target. So in doing that, there are two ways you can start doing that. It was okay. Well, if I see nominal inflation going down, I start adjusting my rate downwards, because we have one of the highest rates, one of the top 3 highest rates in Africa. And again, that is going to constrain the rate sector, really. Because, if you look at credit expansion, most of it is happening in the government sector. But you are punishing the entire economy, the private and government, for the sin of the government. So, and I think that's one area that Monetary Authority will also have to look at, that who is responsible for the growth, the surge in liquidity. Okay, because when you see liquidity grow again, and that's where there is going to be a challenge. Because if your inflation rate is coming down because food inflation is coming down, while you are seeing liquidity going up, then you start to see, okay, how do you manage that? Okay, so it will depend on the data, because the good thing is that the MPC has the most recent and most comprehensive data. Okay, that we don't even know. Those outside who are making comments. So they look at those data, and then on the basis of that data, they make their decisions as to whether, what direction to go.
Are you worried that perhaps when inflation is rebased, it will distort the way that we read inflation in the country, just like unemployment rates has been revised to 4.3%, at least the latest figure from about 5 before. I think it even went down.
4 point something now.
Yes, 4.3. So if inflation rate is rebased, are you worried that even economists like you, what will you even be teaching your students? How do we now interpret inflation reading?
It becomes extremely very difficult.
That's against nominal figures versus realistic.
Well, I mean, because the thing really is that, you see, once the MBS is the institution that is given the authority to give us data, whether we like it or not, we just have to abide by the data that they give. We hope, that they can continue to release the 2 figures, and I'm not sure they are going to, that in other words, they continue to use the old data so that those who are working can continue to see what the new data means in terms of the old, okay? why they reduce. So you have two data points you are looking, two data.
But is that realistic?
That would be really difficult.
Yes, it would be difficult.
You see, because it makes analysis extremely difficult. Because when you are doing econometric work now, I mean, just look at unemployment before, you are looking at 30-something percent. 33%. And then something dropped to 5%. That creates a huge, structural gap in your model, okay? So what do you do? Structural break. What do you do to analyze that, to do that? So it's going to have a lot of implications. So, there are ways of doing it that, economically of doing that, but it's going to make the analysis a little bit difficult. And so hopefully we'll get used to it.
If we take a look at fiscal policy and monetary policy, did you see a lot of coordination? Did you see coordination at all in 2024? What's your advice to both fiscal side and monetary side this year in terms of coordination?
I think they need to work together. Last year, I mean, because if you look at the budget, like some people say, it is still very expansionary, and how it's going to be funded, a lot of that will still come from within the system, within local, domestically. And where would that come from? We have the usual treasury base, and also maybe they're also going to do ways and means, okay? So really, once we have deficit, that deficit is likely push inflation up, okay? So the expectation we have, like I said yesterday, at National Assembly, is that I really hope that, the capital expenditure is used such that, some of the supply constraints we have now can be relaxed, okay, in terms of, insurgents, the security, transportation, and those other supply costs, agricultural supply, so on the supply side, the fiscal side will need to do a whole lot of work, okay, so that you can push this, push out to the supply curve, okay, so that once you put that supply curve, that would relax a lot of the cost that the industry sector is facing. And in other words, it also includes, what you do with respect to power supply. So a whole lot of, in fact, power sector now has the second or third largest allocation this year in the budget. Okay, so that about the MDAs, so that is very significant. So if we're able to do a lot of those relaxations on the cost and supply, then that will help the monetary side. Okay, because the monetary side, they have been very clear. They don't want to involve anything that is directly into production and all this. They just want to hold on to what they are doing. So the only way the fiscal side can help is to ensure that whatever spending that is being done now is mainly towards infrastructure, towards capital side, that will reduce supply costs that the system faces.
Okay. Prof, just as we round up, what would you say about government's response to tackling poverty and social inequality amidst these economic reforms? Because very important, we also need to hear from government in terms of filling the gap. Because a lot of people are poor, a lot of people can still not even get 2 square meals now. 2 square meals now right now is a luxury.
Nancy, to be honest with you, I am not too pleased with the way the government has handled the equity side to their policies. Okay, you see, usually when economic policies will have the efficiency part, you also have the equity part, the income distribution part, taking care of the poor and the rest of them. Now, government has been so much focused on efficiency. Take away distortions. If subsidy is a distortion, remove distortion in every sector, in energy. But you are not looking at the same theory tells us that once you remove those distortions, those who are going to make the major negative impact are the poor. So I've not seen it not being done. People, like I used to say, it's like you are doing surgery without anesthesia. There's so much suffering. And so the social investment part of the policy of government fiscal policy has to be emphasized this year. to ensure that they find a way of mitigating the effect on Nigerians.
Okay. I think we'll leave it at that, Prof.
Yeah.
Thank you for your insights as always.
Thank you so very much.
Thank you. And when are you going to come up? Have you come up with an outlook? I haven't seen it yet.
Yeah, it's coming out at the end of the month.
Okay, so
yes,
definitely
yes, you have
get
it,
and we can actually also discuss that.
Yeah,
thank you very much, Prof. All right, I've been speaking with Professor Adeola Adenikinju. He's the president of Nigerian Economic Society, a society that has been in existence since 1957. Yes, 57 actually. A team of economists, all the economists in this country are in that society.
You're one of them,
Yes, actually, I'm one of them. Yeah. All right, and that's it on today's edition of the show. And in fact, this week, thank you for your company as always. Please join me again next week, Monday, bright and early. I am Nancy Naji. Be the best you can be and be that change that you want to see. Bye now. Thank you for watching. In case this is your first time watching us, thank you. Don't subscribe to the channel, drop your comments as well as like, and most of all, share our content.